Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary, and we'll take you through the next half an hour or so of trade. If you've got questions for us, because this show is meant to get all of those questions answered, you can send those questions to us on any one of our social media platforms or indeed on the WhatsApp number that should be and is at the bottom of your screen. Let's take a look at where the markets are right now, and you have the benchmark indices that are trading with gains, and this is along the lines of what we expected, because you had a very strong handover from the US equity markets overnight, and you have the Nifty 50 that's trading with gains of about 0.4% and at very close to that 22,450 mark, inching up towards the 22,500 mark. The broader market's also doing quite well, and that was the case yesterday as well. You have the mid-cap index that's trading with gains, and you have the small-cap index that's up and about as well. Mid-cap index up about 0.75%, and the small-cap index is up about 0.8% or thereabouts. Let's look at the key contributors on the Nifty 50, and you have two heavyweights right on the top of the screen, HDFC Bank as well as Reliance Industries. Both were down in the dumps earlier in the week, but today they're up and about and they're leading the gainers. You also have Bajaj Finance as well as Kotak Mahindra Bank in the gainers. You have quite a few financial names, and the Nifty Bank is doing well. On the losing end, you have Tata Consumer, which is losing ground. It's the worst performer in terms of contributors on the Nifty 50. And you also have Bharti Airtel as well as TCS, Infi and HUL, which incidentally also posts results for the fourth quarter later today. But let's talk about Tata Consumer, because it has posted its results for the fourth quarter and it's underperforming just a tad bit. Let's go across to Mahima to find out what the numbers were and why they were such a big disappointment. Mahima?
Right, Alex. So as you rightly mentioned, the stock is under pressure. It's down around 6% in trade today. Well, this is because the company did miss estimates in terms of revenue and PAT. However, margins have improved from 14% to 16%. Now, the PAT has been down around 22%, and this is because of a one-off loss that they've recorded, which is on account of the acquisitions that they've recently made. But the street is not happy with the kind of volumes that they've posted. 4% like-for-like growth overall is what they've posted in terms of volume. Their beverage business also did not post good volume in terms of percentage. It hardly posted 3% volume growth. Now, in terms of their ex-acquisition growth, it's around 11%. However, if you remove that, it's hardly 6%. So this is the reason why the stock is under pressure. Now, in terms of international business, it recorded a growth of around 7%. But overall, if we see, the premium segment is something that contributes 2/3 to the total revenue of TCPL, and that is why the premium segment has been a bit under pressure, which is why the Q4 results came out to be a bit, in terms of estimates, they missed beat. Well, in terms of margins have improved on account of the non-branded coffee business that they have, and also the weakness in Indian branded margins was offset by the international margins that have taken place. And overall, despite of all of this, the board has recommended a dividend of around 7.75 per share. So this is the overall view of Tata Consumer's Q4 results.
All right, thanks Mahima for that. Good morning, and on that note, I'm going to introduce the guests for today. We have Saurabh Jain, equity of SMC Global Securities, and Ayush Mehta of Nirmal Bang Securities. Thank you to both of you for joining us today. Saurabh, I'm going to come to you on this Tata Consumer. We saw the results yesterday come out. Revenue, margins, group missed street estimates, but a disappointment on the profit and the volumes front. But from a longer term perspective, do you think this is going to get better and this is just a one-off thing, or maybe because we're seeing some sort of constraint in consumption, so maybe some sort of positive that may come out in the next few quarters?
Hi, good morning. See, largely the company is into the branded segment and the premium segment, and we are seeing that in many categories, in many goods, the premium demand is on the rise. So I think it may be a one-off, and if you look at the margin profile also, they have been able to inch up their margin profile, margins also. So I feel that the company is on a strong footing in augmenting their product portfolio, branding their premium brands and all. So I think it is a story which is for the long term. I think it is a kind of a portfolio stock. One can buy this stock in a staggered manner in these dips.
Let's talk about the queries then, and we've got several that have already started coming in, and I would encourage you to in fact send your questions to us on that number that you see on your screen. The first one we'll take today is from Gautam, and he's writing in from West Bengal. He's talking about Central Bank of India. He has not told us what level he has bought at, but I will go to Ayush on this one, since he's not mentioned a time frame either, and he's looking for a target. What's the view on this particular counter? It's down about 0.4% right now, but do you have a target in mind?
Yes, good morning, Alex. We are quite bullish on Central Bank from approximately 37 rupees. We are buy calls on that. It is forming a good high top, high bottom formation, and it is on the verge of breakout. I feel Central Bank can touch somewhere around 77 to 80 rupees in the coming days, in the coming future.
All right. Next counter we're talking about is Hindustan Unilever. This is from Aslam from Bangalore. They say they have bought shares at 2,327, so slightly elevated levels from the current market price. And they wish to hold this from a longer term perspective. Saurabh, Hindustan Unilever results just around the corner. We're going to see that coming out today. But before the results, any sort of advice you would give, or you would say maybe hold on a little bit and see what the results are about?
See, if you look at the HUL, I think in the last few quarters, the stock has done nothing. And in terms of growth, the company is, putting up a meager set of, they're coming with a weaker set of numbers also. This time around, it is also expected that because they have reduced the prices of some of the products, the revenue will hardly move up, and there will be a 3-4% kind of a volume growth. And the profits will also not move up if you compare year on year. This is what the expectation is. I think the kind of valuation at which it is trading and the proportionately the growth it should see, the company is not seeing that kind of a growth. So in my sense, I think it will be a contrary call only. In my opinion, I think it is better get out of the stock and invest in sectors like banking, IT, power. I think there are more chances of making good, handsome return in long-term investing.
All right, so point taken on HUL, and do stay tuned over the course of the day. Of course, we'll get you more details on the results. We are talking about Britcom next, and it's not something that is spoken about very often, and hopefully I will be able to get a view from Ayush. This is something that Satya bought at levels of 5.67 rupees per share a while back. The stock is trading above 15 right now, Ayush, so he's making gains. Should he get out at this level?
Talking about Britcom, since it's a small stock, we don't have much data on this. Currently trading around 15 rupees, but it has formed a good double bottom formation on the daily chart, and I feel it can go up to 17 rupees in the coming future. So I think he can continue to hold the stock by keeping a strict stop loss of 14.5 rupees.
All right. The next two counters we're talking about are BSC and CDSL. This is from Sri Kishore Sharma from Bihar. They say they bought BSC at 762 rupees and CDSL at 1,241 rupees. So I'm going to come to you on this. We've seen both of these stocks do very well in the last 1 year. Both of them have been multi-baggers. But do you see more upside from here on?
I think if you hold for long term, surely you will see more upside coming in the next 4-5 quarters. But I feel it is now a good time to take some money off the top of the table, because the valuations are also very high in terms of if you look at the BSE, it is trading at 5-15 times to book value. CDSL is also taking it a premium valuation. So I think it is good to book some kind of a profit from it.
Okay. We've got a question on a couple of, so I don't have the name, but so therefore I would encourage you to please put your name in if you've not gotten in your description on your number. We've got Usha Martin as well as Johnson Hitachi, two counters that have been bought. Usha Martin at levels of 100 and Johnson Hitachi at levels of 900. Ayush, what's the view on these two counters? Not got a specific timeline in mind, so if you can talk about both the short-term as well as the long-term trends on these two.
Let's talk about Usha Martin first. If we look at the chart of Usha Martin, it has given a good formation of flat pattern and it has given a breakout of 350 levels and currently trading around 365. I think the stock should outperform from here. There's a fresh breakout coming in at around 370. Once it crosses 370 on closing basis, I feel we can eye for 400 rupees also in this stock. And the next stock is Johnson, right?
Gee, that's right. And this, by the way, is a question from Manish Arora. Manish, thanks so much for your question. Any view on Johnson Hitachi? Bought at levels of 900, Ayush.
So Johnson Hitachi is trading around 1,200 rupees right now, but it has got less volume and there's a formation of inverse head and shoulder on its daily chart. So I feel Johnson Hitachi should be holded for the long term, and the minimum target we are seeing here is 1,500 rupees.
All right, the next counter we're talking about is Concor. This is from Vaishnavi from Chennai. They bought the shares at 791 a piece. It's currently trading at 964 rupees. And now, Ayush, I'm going to come to you on this. Any targets you have on this particular counter?
So Concor, we have been continuously bullish on Concor since 850 levels. We have been generating buy calls on that. But there's a resistance we are facing here is at 975. So once the stock crosses 975, then only there's a big target coming in for 1050. Otherwise, I think there should be a stop loss which needs to be maintained at 925.
All right. We've got the next question from Hardik Bansali, and he's writing in from Chennai. He's got Tata Investment, and he's holding 100 shares, which he's bought at levels of 6,750. He's wondering whether to continue holding on to this. Should he increase? This is a counter that is not very liquid in terms of volumes, but it was in the news because of this entire Tata Sons thing. Should you hold on to it? What's the strategy that you would employ?
I see. If you look at all the businesses of the Tata Group, be it automobile, be it software, be it other FMCG business, all the businesses are doing good. And it is expected that these businesses will continue to do good, and the stock prices will also move up and would see good growth. So in that sense, I think it is good to hold Tata Investment.
All right. The next counter we're talking about is Aditya Birla Fashion. This is from Rajesh Maheshwari writing in from Singapore. They say they bought the shares at an average price of 238 rupees. It's slightly above that, 265 rupees. Not done too much in the last 1 year, Ayush. But what would you suggest from a short to medium term? Are there any sort of targets you have on this counter?
So talking about ABI Apparel is continuously consolidating from quite some time now, and it has finally given a breakout in yesterday's trading session. So I feel short-term targets would be 300 rupees for the stock.
Okay.
290 is a big breakout zone, and then we can see 300.
It was in the news, of course, yesterday as well. Yes Bank is a counter that we're talking about next, and this is a question from a couple of individuals. We've got Ramesh from Hyderabad who's asking about this, and Utpal as well that wants to know about this. Ramesh has bought 4,300 shares at levels of 33, and so he's losing a little bit of ground. A lot of people have bought into this counter with the hope or the expectation, considering the shareholders, that things will turn around, that things will improve on the business side. Is that something that you expect as well, and what should the strategy be?
Actually, things are turning for the Yes Bank, but not that in fashion. I mean, if you look at the valuation now, the things are not moving in that fashion. If you look at the business growth, the NPAs are still high. They are seeing growth of approximately 7-8% in terms of business. I think they are better bets. If you look on the PSU bank side, for example, Bank of Maharashtra, there the expectation is that the growth would come at a higher pace and the profitability will also rise. The business is going good. So, in my opinion, I think it is better to shift money from the Yes Bank to the companies like Bank of Maharashtra.
All right, it's time to slip into a short break, but Saurabh and Ayush, stick with us. We'll take more questions on the other side.
Welcome back. We're in the midst of taking all of our viewer queries, and if you've got one for us, you can send them to us. Send it to us on that number on your screen right now, or in fact on any of our social media platforms. The next one we're taking is from Satya, and he's asking about Aster DM. After the drop in the price today, is it advisable to pick up, or should you wait? And for what levels would you wait? It's down about 4%. He's looking at price targets 1 year, 2 years down the line, so pretty far down the line. Ayush, can you look that far, and what levels would you suggest accumulating at?
Well, it has been a good gap down in today's trading session, and so there's an immediate support at 379. We need to wait and watch if the stock sustains 379, 380 levels on closing basis. I think we should wait for a day or two so that we can identify whether it's sustaining at that levels or not. So only then it can be bought.
All right. The next counter we're talking about is Infosys. This is from Vishakha, and they say they bought the shares at 1,614 rupees, slightly elevated levels from the current price. Saurabh, on Infosys, disappointing results, but would you suggest holding on to it? Now, the viewer seems to be unsure of how long they should hold on to this counter for.
See, if you look at the numbers, I think the management has guided that the discretionary spending is low, and they have given a lower, they have reduced the guidance for the 24-25. So, but if you look at the order win, they have got the large mega deals also in their kitty. So I expect that the execution will improve probably in the second half of the year, and because of the rise in the metal prices, crude prices, the inflation expectations risen in the global economy, and the expectation of rate cut by the Fed has now it is expected that it may come during the end of the 2024. If the interest rates would remain high, the spending will be lower by the BFSI companies in the US, and thus will result in the lower profitability and revenue for these companies. So these are the expectations. But in my sense, I think things will gradually improve in the second half of the year. And it is a good large cap company with good order book in the hand, and I feel that it can be you can hold it for more than one
point. All right. The next counter is Adani Enterprises, and it's a question from Mathew. He's asking whether or not it should be bought or could be bought for the next 6 months, and what targets you would keep on this one from a technical standpoint, Ayush.
So Adani Enterprises is consolidating right now in its weekly chart, and so the breakout will come at around 3,100 levels on closing basis. So if bought at 3,100 levels, then the minimum target we are seeing here is 3,500.
Okay, just a standard disclaimer. You probably know this already, but it's incumbent on us to repeat. This is NDTV Profit, part of the NDTV Group, and it is part of the Adani Group as well.
All right, the next counter we're talking about is strip steel wheels. This is from Hita.
Steel strips wheels.
Yes, steel strips wheels. And this is from Hita from Ahmedabad. They bought the shares at a price of 70 rupees, and the current price is about 226 rupees. Now, Ayush, it seems like the counter is in a bit of a downturn in the last couple of months. But considering they're already sitting on a considerable profit, should they book some profits, or do you see that this wave of downturn changing?
Well, stock is in the lower channel right now, so I would recommend to book profit in half of the quantities and hold the remaining half with a stop loss of 200 rupees.
It's interesting. This company I used to look at when I used to track auto back in the day, Smriti. If you look at the wheel of a car, it's the one that makes the alloys on the wheels, so that and various cars. So it's quite an interesting company to track as a proxy for the sector. Let's talk about Sterling and Wilson Renewable Energy, and this is a question that has come in from Vinod from Chennai, and he's asking about this because he's bought 30 shares at a price of 570. He's asking whether to hold on to this or should he exit. He's making money here. Saurabh, on the fundamentals, what's the view here?
I think there is a good amount of the operational aspect has changed in the last few quarters, and the expectation is that the company will deliver good revenue and profitability, and that is what being reflected in the prices. So in that sense, I think the recent management commentary, the recent numbers are pointing towards that. So in my sense, I think it can be a good.
All right. The next counter we're talking about is Balaji Mines. This one's from Subramaniam from Tamil Nadu. They hold shares at an average price of 38 rupees. Now the share hasn't done too much, Ayush, in the last 1 year itself. Barely moved about 2.5%. But do you see that changing now?
So in December 2023, stock has given a breakout of 22.70 rupees. And till now, it is holding itself above those levels. As long as it is holding 22.70 on closing basis, there is no downside in the stock. And since specialty chemicals is performing well right now, the sector is performing well. So I feel this stock should perform well as well because it has given a breakout already. So with the minimum targets we are seeing here is 2,500.
It's interesting. I'm quite curious because we're seeing chemicals doing well right now. That hasn't been the case for quite a while. Saurabh, has that moment finally come when a bottom has been found and you should consider looking at the space? I know that the question was specifically on Balaji Mines, but people have been talking about the turnaround in chemicals and waiting for that. Has that moment come?
It is difficult to take a call, but yes, people are looking towards the companies who have high capacities. In terms, they maybe when the things will turn, they would not be needing capex requirement, and they would not be parking money for their capex activity. And the utilization rates are also improving for those companies. So in that sense, I think if you look at the Balaji numbers also, in the last quarters, they have improved. We have seen improvement in terms of margins and the profitability. So yes, the valuations have now come down, and the expectations are that these companies will be able to generate more profits and revenue. So in that sense, I think it can be a good call.
Okay, I'm curious whether you have coverage on Moss Chip Technologies. This is a company, a software company that is undertaking semiconductor design and embedded services. Saurabh, do you have a view?
No.
Okay, fair point. I thought that would be the case. It's a relatively small company. We got a question on this yesterday as well. But Ayush, on the charts, we've got Jeet from Kolkata who's bought this at levels of 450 rupees. No, he's got 155 rupees. Apologies, he's got 450 shares. The stock is currently trading at 169. What should he do with this?
Since it's a BSE only stock and it is performing quite some time, performing well from quite some time now. I think because we don't have much data about this stock, so I would recommend to hold this stock with a trading stop loss of 160 rupees as of now, and you should book profits at higher levels.
All right.
Long as it should be profit needs to be booked.
Okay. The next counter we're talking about is Easy Trip Planners. This one's from Dhruvaj. They've bought the shares at 45 rupees levels, so not very far away from the current price. And this is from a longer term perspective. Saurabh, is this part of your coverage?
See, for the travel and tourism, in the travel and tourism industry, we are recommending hotels rather than the service providers like East Trip. So we like companies like Chalet, Indian Hotel. I think it is better to park money in the hotels like Lemon Tree, Chalet, and Indian.
IRFC is the next counter, and this is from Kanak Kothari. Kanak is bought at levels of 82.6 and significant quantity, 5,000 shares. She's making quite a bit. Should it be held though, Ayush?
Yes, it should definitely be held because it has formed a good rounding bottom formation on the weekly chart, which is a very positive sign for this stock. As soon as it crosses 155 rupees on the closing basis, the minimum targets we are seeing here is 190 rupees for this stock. That is for the long term.
All right. Now, unfortunately, we're completely out of time on this edition of Ask Profit. Thank you so much, Saurabh and Ayush, for joining us today and for answering so many questions for us. And viewers, thanks for tuning in. Hopefully, we were able to take your questions, but if not, we'll definitely try and take them tomorrow. But don't go anywhere. We have lots more lined up for you on NDTV Profit.